Hey, good afternoon, everybody. Welcome to 12-Minute Trading. My name's Doc Severson. I am joined with Dave Lukas here. Today is Monday, the 7th of October in 2024. We got all kinds of volatility going on. We've got another 4 weeks before the election. It feels like all hell's about to break loose, but that's the feeling. What we're going to talk about today is what the charts are actually showing to us. And we have to learn to distinguish between the two, because certainly our feelings right now are like, oh man, everything, all hell's going to break loose, no matter what happens. But we have learned to kind of separate that from what we see in the charts. And what we see in the charts is actually not bad at all. So
Yeah.
Dave, what are you seeing out there? What's going on, man?
Yeah, I mean, price matters, right? And that's just follow price. You and I were talking beforehand, and one of my simplest indicators is just to watch the weekly chart moving average. And as long as the market stays above that moving average, it'll come down, hit it, it'll maybe dip under it, and then bounce back up above it. But as long as it continues to hold that every bull market we've had, that continues. I actually think that all we're doing is walking sideways here, and we're in a very small range. Like on the S&P, it's like 40, 50 points. In fact, we had a 40-point move lower or something, like literally a second before we started this. The thing was down like 25, six points on the day, and we dropped like 50 points. I think it's coming back a little bit now, but and I can't find anything for that. That's some fluke move or something at 2:30 p.m. where some algorithm kicked in. But we are just going like this. And all that's doing is charging the weekly chart back up. It's charged the daily chart back up. The daily chart's ready to run again. And I think we actually see this market run into the election. I have a feel. That's my feeling. That's my gut tells me, is because we're holding these averages. We're going high and tight, flagging like this. We're not really pulling back significantly. It just seems like that's setting up bull flag, and then you're going to get this run that is maybe it's kicked off by the CPI numbers this week. I don't know what it'll be. Some catalyst will do it, but yeah, I think we see it run to the election and then maybe puke right before the election, like run to the end of the month, puke right before the election, and then all in afterwards and run to the end of the year. I still think we hit new highs, 6,000 plus on the S&P by the end of this year. And then in 2025, it's like 2021 all over again. All bets are off, and it could be a train wreck. That's how I see things shaping up. We have to get all the retail traders on board, party like it's 1999. Nobody can lose. The easiest market to trade. Everybody's now a trader and knows everything. Like, we're just not in that euphoric stage yet. And we have to have the move to get them on board.
So Dave, what would you specifically look for on the chart to give you warning signals that a bull market is about to maybe crack to the downside? What kind of things would you look at?
Yeah, pull up the weekly chart with the Bollinger Bands and the simple moving average on it, just the 5-year or the 3-year weekly chart. And this moving average, pull up the 5-year actually, because you can go back and look at 2021. It's a good example. To me, this is probably the best indicator of this. And so if you, go 5 if you can. Yeah. And so the first thing you see on this, and this is you can see at the top, it's a 0, 20, -2, 2.0 simple moving average, right? And you can see, if you look back at 2021, see how it crossed above the moving average and then held that moving average. Okay. The whole time it held that moving average until it cracked into 2022. And that's when we got the bear market. So if you look at it, just each time we crack through that, right, there are times where we'll test it, even undercut it. We just did back in August. And that is, but it stays above it and holds it. That is a sign that we still got the bull market. So look at all of 2020 through 2021. I mean, you can draw almost a perfect line, with that on that moving average, with that thing coming down and testing it, and not dipping below it. And then finally you get that move that goes below it. It tries to come back above, right? And then that becomes the resistance, and then you run below it, and you're in a bear market, until you close consistently above it and hold it. And even in a bear market, it's the opposite, right? Then you try and you may have it where it goes above it a little bit, but then falls back under. And you have that right there, like in, April, June timeframe of 2023, right? And so that to me is just like just a big signal, right? So until we really break that line and can't hold it, we're still in a bull. Now that's still some big movement, right? If we wanted to drop to the where that line is, what is that, 5,500? So that we could go down 200 points from here, still be in a bull market. So that's just like an easy, big glaring one that I like to watch, as kind of an indicator.
I'm gonna
How about you, Doc? What are you watching these days?
I'm gonna bring up something a little bit different. So, what I talk about in my fractal energy trading program is that there's four major rules, and I'm not going to bore you guys with all four of them right now, but two of them are very important. That rule number one says that larger time frames dominate the trend. So if you look at this monthly chart, I mean, all of this has been essentially, with the exception of a little bit of corrective behavior here in 2022, all of this has been higher highs and higher lows. So from a simple Dow theory perspective, there's a lot of strength here in this trend. There's a lot of momentum. Think of it as a battleship or an aircraft carrier just like steaming along at flank speed in the Pacific. It's going to take you, if you want to reverse course, it's going to take a long time. It's going to take miles before you can do a 180 on something like that. So that goes to rule number two, which is that reversals start from the inside out. So smaller time frames will actually start the reversal process. So if we want to look at that and go out to, well, I don't have enough time on here. Let's go to settings here, and let's go back a couple of years. So let's go back at 5 years on the daily chart, and you can show how the price started to reverse back here, right? So if we look at this, the actual reversal started, there's a lower high right in the first week or second week of January, lower high, lower low, okay? And then we started the process of moving to the downside. And this is a weekly lower high, lower low. So it had actually started to move to, and again, I don't have this over here, but it had started to work to a weekly lower high, lower low. And then finally, what happened is we got into March, April timeframe. That's a monthly lower high, lower low. So I look at a lot of these things from a fractal price perspective to see where the reversals are for these things. And so for right now, we're nowhere close to reversing. There's nothing here other than, perhaps showing a little bit of a lower high and potential lower low down here to maybe 5,600. One thing that I'm looking for right now, let's see if I've got this on a chart, is this confluence level here. If we look at this, something else that I look at is the fibs, where if we look at this move here from bottom to top, all we've done so far is just pull back to a 23.6 retracement, which is nothing. Where I'd feel a lot more comfortable that we're actually making some headway, setting up a decent bottom. Remember, guys, you have to think of it this way. If you want markets to go higher, you got to take one step back to go two steps forward. One step back, two steps forward. You've got to build up the negativity here. You've got to build up those bad feelings. This is why learning how to trade can be so difficult at first, because you're like, wait a minute, I thought the price was going down, and all of a sudden it's going up now. That's you got to build up the short interest. The short interest is all those guys thinking that we're going to be heading down to 4,800 or something like that, and they want a piece of that. And so they load up on short positions, and all of a sudden at a confluence point, this is a very obvious place to buy. The big whales or institutions will jump on board this thing. Remember, rule number one, larger time frames dominate the trend. And so they're gonna go with the easy money for as long as they can until it no longer makes sense. And they'll be the first rats off the ship, but it's not ready yet. It's not ready to do something. Now, if this actually starts to undercut this and do something like this, then I'll pay attention, because the next move up will be some type of weekly lower high, and then we'll see whether or not it makes sense to get out. But
and then that's a good time to start watching that moving average.
Right.
Because if it doesn't hold it,
right.
and it can't, and it puts in a lower high and then rolls back over, that tells you you've got that change in polarity to on a bigger time frame, right? To maybe what we would consider volatile and trending, which is typically a bear market. And if you haven't gone back and watched our last session that we did about the market timeframes, you really should, because we spent a lot of time going through. There's 4 different or not timeframes, but 4 different market characters.
Yeah.
And those characters really help you, if you can understand market character, really help where you're at. Like right now, we are, just kind of, we could make a case for being in a quiet and trending market, just like this, right? We're not really going anywhere, quiet and trending, right? But we also are in, sideways too, right? So we got to see the break, right? Because we're going to break out of this either way with the energy that we have. And once we do, we'll have a really good idea. But my bet is I'm giving the nod to quiet and trending higher, which is a kind of a rip higher, through the month. And it's just because of what I said. I think, Doc, it's important that, like, you guys need to understand the anatomy of the market, not the market, just the characters, but the cycles, right? So think about how it goes. There's 4 phases, right? It's disgust, disbelief, acceptance, and euphoria, right? So the disgust is when you have the market just crash. That's your bear market and everything, and can't seem to find a bottom. And you see these in microcosms. You can see this in the course of a week. You can see it over a year, and so on. But everybody's disgusted, right? Maybe August had a little bit of this, right? And then all of a sudden it rallies in disbelief. Think about the V bottom in August. Like, the market went down. Everybody's disgusted. It's down 10%. The VIX hits a 55 print, right? And then all of a sudden it just turns around and just V bottoms straight up. Disbelief. Nobody believed it would just recover all of that in the span of 3 or 4 days, a week, right? And then it gets accepted. Okay, fine, right? Let's accept it. I guess it is back, right? And then you get into euphoria, and then it all starts all over again. So you can see it on microcosms. And so I'm looking at the longer term, right? We've come out of a bear, right? The disgust. We rallied like crazy into, probably, I would say, the spring is about where disbelief was finally turning to acceptance. And since then, we've been in acceptance. And the last stage that we need to see here is that euphoria. And it's usually that parabolic tail, like 2021, you see, from November on, like straight up, like, oh my gosh, like this thing can't miss. Every day it goes up and up and up and up, right? And even like the move from last year, once we really came off the bottom there, out of the bear, that one it seemed like every day was a green day. You couldn't lose, right? And so you get these euphoric times in the market, and that's usually when the big boys are selling, right? So, Doc, I mean, you can explain that. They have to have major volume to get rid of their shares. Otherwise, everybody knows they're selling out.
Right. So let's say, oh, by the way, for those of you that are with us live today, get your questions in today. We'll be here till about the top of the hour. So if you want something looked at, whether it's a stock or you just have a more, holistic question on what's going on, fire it in. But what the institutions will do is, I mean, they generally will make most of their money being on the long side, right? So that's great, but they have to rotate. They can't stay with something forever. I mean, you're never going to beat the S&P if all they do is just hold the S&Ps. And so they're always looking for alpha. And so they're going to rotate in and out of things. And so what they will do is they will look for conditions that are favorable for them to sell into. And when are those? That's when everybody's buying. So you want to get euphoria where everybody's snapping up everything. Everybody in the retail end of the spectrum is snapping up everything. And you also want volume, because you don't want to move the market. If you're out there selling, you don't want to move the market against you, because then the next time you sell, it's going to be less and less and less, moving the market against yourself. So, I mean, there's there's, I don't know whether these are rumors that could be true. I don't know if anybody really has the power to move the market for themselves. Perhaps a couple of firms could do that for a short period of time, but we're talking about trillions of dollars of money. And so you could have a condition where you create something, or you see people do this all the time when they go on CNBC, they will talk their book and they will say, oh, I think this is the greatest stock in the world. And that has some pull to it. And so you'll see things move up. They may be on the sell side of that stock. Yeah. And so they're going to talk their own book. They're going to do whatever's necessary for them to come out on top. And so institutions will look for conditions like that where it's a feeding frenzy, and that's perfect for them to shed off. Hey, would you like that? It's like that scene from Trading Places with Eddie Murphy.
Yeah.
Where he's like, oh,
they're waiting.
Here you go.
Wait. Okay.
Here you go.
Exactly.
Here you go. He's out there like,
and you can understand then why the bear comes in after that, because what happens is you get to this point where they've exhausted all of that inventory, they've sold it out, and now all the retailers are holding it, and they want to start to sell, and there's nobody to sell to. And so then all of a sudden, price starts dropping because in order to sell the shares, it's bid and ask, right? Okay, you're not buying from me here. Well, buy from me here and buy from me here, and then that creates that cascade and that momentum. And the big boys just sit on the sidelines and they wait for that to happen and wait for, it to continue lower. And then they'll step in. So that's kind of the thing we want to see. So, I did notice, Doc, as we were talking there, that we've puked even further today. I don't know what the reason is. I don't see anything. I'm looking out even just across even headlines and stuff.
Yeah. So think about what happened on Friday. So we had our jobs report. Mm-hmm. The jobs report was a good report, right? It was a beat. But what are the unintended consequences of a good jobs report? All of a sudden, people go, "Oh crap." That's a big beat. That's sort of inflationary, isn't it? And so one of the points that you were bringing up is that it was mostly government jobs, which is even more inflationary because we know what they pay. So here we have a lower high, and this creates a bull trap that was set up on Friday. So what I'm actually looking for is with this great big pattern that we had. So, since the middle of July, we've been in this, this is actually an ascending triangle pattern. And so we got a nice breakout from this on the Fed meeting a couple of weeks ago. But what's the one thing that's been missing from this whole move?
A retest?
No. Well, retest is nice, but there's no volume here.
Yeah.
Right. So look at areas like, when we've had, so like the breakout from this pattern, which was about a year ago, into the end of October was like ruthless. This was an absolutely face-melting rally. This thing just took no prisoners. And it was on pretty big volume too. But look at what's happening today is that we've got this breakout and it can't get out of its own way. It's into all-time highs, can't get out of its own way, and there's no volume here. So the bears are just sitting there waiting for something to happen, and I think this is what's happening today. Now, what I look for on conditions like this is I look for the price to come down to areas of confluence. So a 38.2 retracement is a great thing for that. You also use, things where you're looking for let's see, where is this on my chart? There it is. You're looking for the Bollinger Bands to show a certain level. Mm-hmm. And actually the price is almost down to that. If you see that blue line there, that is the moving average. And that's
your daily chart moving average.
Yeah, That's your daily chart moving average. That's your 20 MA, which is a 20 MA simple. Now, if we go out to the weekly chart, we're going to see, let me get these fibs off of here. We're going to see that this has got quite a ways to go before it breaks out. Now, a move back down on a retest would show that this is not a very good breakout. If we cut below that yellow line there, that's a move back into the pattern, which means that it's a breakout failure and it's causing a bull trap. So it's trapping bulls, which are, panicking as we speak right now. If we look out at the
And that would negate my call
intraday.
for a rally into the end of the month, because if you undercut that, you're probably going to fall down some more. So you'd stay volatile. You'd still be in a decent range. And again, that moving average would still be something to watch to hold. I just don't think we're breaking and going into a bear here yet. We're
Yeah.
just not ready for it yet. That's
Now,
coming.
now
It is coming, but
don't
it's not
forget
yet.
that when we went through a very similar condition back in 2016, look at what we went through in 2016. We went through, shake and bake and shake and bake. And then we went through this little move here was, let me zoom in on this. This little move here was Brexit, which caught everybody by surprise. But look at this. We went literally nowhere for months, all the way through August and September and then October. And then here comes the election. And then see you later. Goodbye.
Really similar too. I mean, we really haven't gone really anywhere since July.
So here's your consolidation pattern. There's your breakout, and this is a breakout failure. Comes all the way back down to the 200-day moving average, simple moving average on the daily chart. That's quite a move down. So, but that's talk about a sideways move there, and then boom, see you later. Certainty, we get it. Goodbye. Right.
Yep.
So one thing you've also brought up is that we're getting a lot of these moves lately where it's like we'll just sort of walk sideways and then we puke intraday, and then by the close it's back up in the pattern again. And so we've been doing a lot of that, and I think that's a lot of institutions that are looking for, they're trying to rotate inventory and they're testing, right? Where's the floor of support? Where can we get a better buy point here? But still not a whole lot of volume today. Not a whole lot of volume. By the way, guys, we're going to be here for another 5 minutes or so. If you got any final questions, let us know. Or if you're watching this on a replay, which is going to be most of you, if you have any questions you want us to handle on the next one. Are you going to be here next week, Dave?
Yes.
Next week? Okay. Yeah, I've been gone for the last week, like living out of power, working off a laptop.
Well, yeah, talk about that. I mean, your firsthand experience out there for those that are, really wondering about the situation on the ground in North Carolina, South Carolina and stuff. I mean, what's cut through the noise? What's really going down?
We got really lucky because we only had, during the time of the storm, we had the eye move right through us in Greenville, South Carolina. And we got 8 to 10 inches of rain in a very short period of time. We had some minor flooding. We had a lot of trees on my street, just huge 100-year-old trees that are 150 feet high, just falling on houses left and right. So we all kind of came together and got to know each other and helped each other out, or that kind of stuff. But north of us, I think what happened is a couple of weather fronts came together in addition.
Right.
And we had some pretty serious rain 2 days before that. So the rivers were already swelled with a lot of rainwater, and the ground was already soaked. Nowhere to go with this stuff. So Asheville, North Carolina got absolutely body slammed. In fact, what I'm finding is that there were so many mudslides and river, just torrents coming along, sweeping people away out of their house, that they're finding bodies in Tennessee.
Jeez.
100 miles west of there, further downstream, further, in the watershed.
Right.
But it's incredible. And now here we got Milton. Is it Milton or Melvin or something like that?
Yeah, Milton.
Milton's
Category
coming in
5 out there right now. Weird though. I mean, I don't think I think they said the last time a hurricane started like within the Yucatan Peninsula and then just like went like this and straight over to Florida was like before the Civil War. And then there's another one that is interesting enough. There's another one they're saying that's out in the Atlantic that is going to hit Europe, or at least its track is to go hit Europe, which I don't remember in my lifetime a hurricane hitting Europe. There may have been one when I was younger, but I don't remember one in any time that, an adult life that a hurricane hit Europe. So very interesting out there.
So I'd say we've got our fill of uncertainty for the next 4 weeks.
Yeah.
It's going to be it's incredible. I think
and you know what? That could just make us go like this in a big range
I
and not end up going anywhere.
absolutely we could just be flying all over the place. And
Yeah.
I think we're gonna look up 3-4 months from now and go, wow, that was wild. We've talked about this before. Like, we're not here to be political about things. It doesn't really probably matter who actually gets elected because the market knows both of these.
Right.
If they don't know the individual, they know the system or the body behind it.
Right.
So either way, I don't think it matters all that much in terms of that. Although it's just just the general uncertainty about everything right now is going to intensify. I think.
But I honestly, around the election, I don't necessarily agree that there's uncertainty because for the first time ever, the market really does know the difference between the two. We had one in office, and that's the thing. I mean, nobody, I don't think in this lifetime has had an election where you had somebody in office leave office and come back. So we kind of know I think the last time was like Teddy Roosevelt. But the market knows what they get with Trump. They know what they get with Kamala at this point. So I think either way, the market rallies in the end of the year because it's certainty. I think either way, the market it has that certainty, but I think we just have to get through that up until then. I think there'll be a lot of just horse trading type stuff ahead of it, making bets on this or that because the policies will affect. They will affect the types of companies that do well in those environments. That is a difference, right? So you can see rotation, like sector rotation and stuff. So that type of stuff I could see happening. That's what can create volatility. But as an overall market, S&P and so on, I think we rally through the end of the year. And we know the fourth quarter typically we rally, anyways. And so this just gives that certainty and allows that to do that. But it'll be interesting to see what leads that rally, what sectors. That's what'll change.
Okay, so my bottom line for today is watch support at 56.25 on the SPX cash index. That's not the futures, but the cash index. 56.25. There should be support right now as we talk. We are at
56.88.
56.88. So we got another 60 points to go. That could be a good day's work in the market. So maybe another day to go before we have something like that. But I would expect to see support come in almost as though you touched your hand on a hot stove for something like that. If that does not happen, then we have a breakout failure, and I expect to see lower prices, perhaps something closer to 5,300 before all is said and done. So we'll see what happens with that. Dave, what are you thinking?
No, I mean, I same thing. Again, for an overall bull market, watch that weekly moving average.
Yeah.
That's your level, 5,500. Continues to hold. You're in a bull, but you're just having pullbacks within the bull. I'm watching, like even today's move is charged up the daily chart more. It's not releasing on today's move. Okay. So if we were starting to go lower, typically that fully charged daily chart, which was at like 66 coming in today, is now at 72, right? Normally you'd start seeing that thing curve over and start to head down and go with this, and it's not happening. So until that thing curves over and the trend goes in a direction and that goes with it, we're still going sideways. So those are the couple things. And that daily chart's not going to last another couple days or so. So maybe it is CPI as a catalyst or something, but we'll see.
Yeah, we're going to
remember today is October 7th. It is the anniversary of what happened in Israel. So I don't know if there's people taking some chips off just in case something happens overnight or something like that, right? And then they'll jump back in tomorrow. That might be part of it too. So, but as of now, obviously, it's going to be nighttime over there. So we'll see what happens.
It's funny you mentioned that because I remember seeing exactly the same thing on 9/11 every single year. On 9/11, you'd see selling in the early part of the day, and then nothing materialized into the end of the close. You'd see buying coming in. So that happened for several years in a row before the market sort of got amnesia about that sort of thing.
Yeah.
Okay.
And so today there may be a little bit of that, people saying, hey, risk event overnight, I'm going to take some off the table. Nothing happens. I'll come back in tomorrow. Could be a little bit of that. But as of now, that daily chart is not releasing. So that doesn't tell me that this is a trend beginning at all. So,
right.
Yep.
Outstanding. Well, thanks everybody for joining us today. And we're going to do this again in a week. And I bet you we're going to see some displacement.
Yeah,
we'll see some displacement between now and then, certainly. So thanks for joining us here today.
Yeah, you have a daily trend kicking in, guys. Get ready. It's going to start this week. Whichever way it goes, you're going to get 5 to 7 days of solid trend in that direction. We are second, third highest energy on that daily chart that we've been in a year. So Get ready.
All righty, folks. Well, we'll see you guys next Monday. Thanks again, and we'll see you then. All right.